case for Africa, I think, is for us just so compelling. There's nowhere else in the world where you have consistent levels of population growth, urbanization, and GDP growth. Even in the current environment, we're expecting GDP growth across Africa of 5%, which of course makes South Africa seem like a complete laggard. But nevertheless, of relatively low bases, these are, from an FMCG perspective, are numbers that you just can't bet against. And from our perspective, 9 liters per capita, and this applies to also very low consumption of any of the beverages that we sell, Coca-Cola as well, it creates a compelling proposition. So from many perspectives, I have, frankly, the easiest job in SABMiller because all I have to do is stay on track with the GDP growth. And the reality is we try and measure ourselves ahead of GDP. So if I grow the business at 5% a year, then I've really just matched the underlying growth and the opportunity to try and accelerate that growth. To give a sense of perspective, in 1960, Nigeria had a population of 45 million people, roughly the same as England. It currently has a population of 175 million people. I don't know how it's possible to meet the needs of all those consumers as they come to the market. Even South Africa has tripled its population over the same period, from 17 to around 55 million people. So that is just a massive opportunity. We've, of course, been able to take tremendous advantage of this opportunity, firstly through acquiring assets, and we did some very good deals. We bought our Tanzanian business for somewhere in the order of $20 million. That business makes over $220 million a year in EBIT. Similarly, in Mozambique, a business that now makes over $100 million, and we have lots of success stories and a few little mistakes along the way. More recently, we now have got into the investment much more ahead of our demand curve, but our business is fundamentally built of this sense that we develop local insights in local markets using expertise that we've developed in South Africa and executing our local brands. So our business, I think, has an enviable position. We have a very strong position here with mostly number 1 or number 2 positions. We have a French partner. It's a private family-owned business called Castel, where we have a cross-shareholding in each other's business. So across Africa, with that perspective, we are by far the dominant player, with at least 6 out of every 10 beers in Africa sold being ours. But the other interesting thing is we're only roughly half beer. We're a very strong soft drinks player. We also sell traditional beer, a category we'd thought of as dying, but now see plenty of opportunity in terms of beer affordability. And to some extent, we've also experimented with spirits as a category. And the main reason we've been looking at spirits is that you have a very legitimized beer and soft drinks category across Africa, but spirits tends to operate somewhat below the radar. So if we can drive it into legitimate tax paying, we can accelerate growth in our beer business and help clean up that industry as well, which is obviously very good for our growth. We've also, of course, now moved into this mode where we're spending a significant amount of money in Africa. So of the order, including South Africa, of the order of $800 million a year, mostly in putting in new infrastructure, so lines, breweries, capacity maltings. We've just completed a new maltings in Elroad, and we're busy building a maltings in Zambia. A maltings is a facility to convert barley to malt, which is used for beer. And I mean, that's a very powerful investment because it completely localizes your value chain. And if you think of beer, it was effectively, a lager beer was effectively developed as a colonial investment. So the raw materials up until the last 20 years effectively still came from Europe. Malt is grown in colder climes with very long days and has not traditionally done well in Africa. But South Africa will, in the next 2 to 3 years, be a net exporter of barley malt into our African businesses. And we expect Zambia and over time Uganda and Tanzania to do the same thing. And that creates tremendous value for us if you think about it in terms of localizing our costs and not having to be exposed to the extent that we are at the moment to euros and dollars. We've also been able to achieve quite transformative growth, so more than doubling the markets, and this is just a representative sample, but these are from very low bases, 5 liters per capita to 10 in Mozambique. And as you can see, the opportunity for us, there's no reason other than the raw affordability and GDP available in that country and our lack of innovation, perhaps, that is preventing us from getting to 30 or 40 liters per capita. So we firmly believe that is well within reach. And we frankly believe that applies to many categories of consumer goods. And as a result, we have a very proud history of delivering double-digit dollar earnings growth. So that's the fundamental mantra we run our business by. Quite difficult in this environment, as you can imagine. So I'm not 100% sure we'll get it right with the rand going where it is and some of our other currencies misbehaving. But on average, on balance, the sense that as a subsidiary effectively of a multinational business, we have a role to deliver strong profit growth consistently. But obviously, we have to think about our business model a little bit differently. So in Africa, I'm never quite sure whether the logistics in Africa are a problem or an opportunity. In one sense, it's a big problem, but once you've overcome it, it's only a problem for everyone else who tries to come and compete with you. So this idea of school fees or establishing a base, figuring out how it works, is something that we've been through. We've been through the school fee stages, and we've figured out the solutions. And it's taken us time, and we've made many mistakes, but we have supply chains that work. We've also figured out that it's better for us to build small modular breweries rather than very large breweries because of the logistics. We've also figured out how to run a brewery really efficiently when you have to supply all your own power, all your own water, and treat all of your own effluent, and then to localize your supply chain as well. So those are interesting and I think are honed out of years of experience and mistakes, but are not from a sense that we're waiting for the environment to improve before we'll make the investment. We see the opportunity to get the returns, and to some extent are investing a little bit ahead of demand because we believe those returns will come, and our experience suggests that they will.